What if I told you that over 70% of stock market trades today are executed by algorithms, many of them powered by artificial intelligence? Yes, AI-driven trading strategies have quietly taken over the financial world, and if you're not using these tools, you might be missing out on valuable insights. In this video, I'm going to show you how to harness AI for trading and investing more efficiently, sharing real-world examples, practical tips, and steps to integrate these tools without sacrificing your own human judgment. Stay with me because by the end, you'll be equipped with the know-how to step up your game in the modern markets. Artificial intelligence has transitioned from a buzzword to an everyday force shaping how we buy, sell, and analyze assets. In fact, recent surveys suggest that institutional investors and hedge funds are increasing their spending on AI-driven solutions by double digits each year. But this isn't just a tool for the big players. Retail investors can now access AI-powered platforms at low costs, and many robo-advisors incorporate machine learning models to build and manage portfolios. So how exactly can AI transform your trading and investing experience? Let's start with the basics: data processing. Humans just can't keep up with the sheer volume of financial data generated every second. Price movements, company earnings, regulatory updates, global economic indicators, sentiment from social media chatter. There's a flood of information out there. AI models thrive in this environment, sifting through massive datasets and extracting patterns that might take you years to recognize, if at all. Imagine a quantitative hedge fund. Each morning it feeds in not just stock prices and trading volumes, but also satellite imagery of retail parking lots, social media sentiment about product launches, and central bank announcements. The AI system identifies correlations. Maybe it spots that when consumer sentiment dips below a certain threshold, certain retail stocks tend to fall the next day. With that insight, the fund can short those stocks ahead of time, capitalizing on information that's hidden in plain sight. But it's not just big institutional players. As an individual, you might use a robo-advisor powered by AI. These services analyze your risk tolerance, long-term goals, and current market conditions. Instead of relying on outdated models, they use machine learning to dynamically adjust your portfolio. Perhaps they detect that a geopolitical event is likely to destabilize a region's market. Your robo-advisor could shift your allocation away from that region's ETFs before the losses mount. Over time, the system refines its decisions, learning which signals accurately predict outcomes and which do not. Then there's the power of natural language processing, a subset of AI that interprets human language. By analyzing news headlines, earnings calls, and social media posts, NLP models gauge market sentiment in near real time. If public opinion on a tech giant suddenly turns negative, say due to a leaked memo on subpar product quality, an NLP-driven model can alert you to adjust your holdings before the market fully reacts. This can mean the difference between locking in gains or watching your profits evaporate. Now, how do you get started using AI efficiently in your own trading or investing process? First, define your goals. Are you looking to enhance your short-term trading results, reduce risk in a long-term portfolio, or just find new investment ideas faster? Having a clear objective helps you choose the right models and data sources. Second, start simple and scale up. You don't have to dive into deep reinforcement learning models on day one. Maybe begin with a basic model that tries to predict price direction using a few technical indicators. Once you're comfortable, gradually incorporate more data, economic calendars, corporate earnings, sentiment analysis. When you see an improvement in your backtests, consider experimenting with advanced techniques like neural networks or ensemble methods. Third, remember that AI is not a magic crystal ball. Even the most sophisticated models will make mistakes. Markets are partially driven by irrational human behavior, sudden news events, and random noise. The true power of AI isn't in perfection, it's in enhancing your odds. It can help you spot opportunities faster, manage risk more proactively, and test new ideas more thoroughly. But you still need your own critical thinking. Combining AI's speed and pattern recognition with your own domain knowledge and intuition often yields the best results. Fourth, data quality is another big factor. Poor data leads to poor predictions, no matter how advanced your model is. Ensure you use reliable, up-to-date information. As retail investors, you can subscribe to reputable financial data providers or tap into APIs offered by established platforms. Clean your data, handle missing values, and ensure the metrics you feed into the model actually matter. It's better to use fewer high-quality features than to flood your model with junk data. Fifth, before putting real money on the line, backtest your AI-driven strategy. Run it through historical data and see how it performs in different market conditions. bullish, bearish, and flat. Check if it overfits, meaning it's just memorizing the past instead of learning useful patterns. After that, try paper trading. Simulate trades in real time using fake money to verify the model's viability under current market dynamics. If it shows promise, then consider a small capital allocation first, and scale up if it consistently delivers. Sixth, keep in mind that markets evolve. A model that works today might fail tomorrow. Regularly update and retrain your models as new data and market conditions emerge. Continually monitor performance metrics. If you notice a drop-off, investigate. Maybe it's time to incorporate new features, adjust hyperparameters, or even switch to a more advanced architecture. Seventh, let's not ignore ethical considerations. If your AI strategy involves monitoring sentiment or trading around corporate announcements, ensure you adhere to regulations. Don't engage in manipulative practices. Likewise, be mindful of transparency. While deep learning models are often black boxes, consider tools that help explain why the model made a certain prediction. This builds trust for you, for clients, and for any stakeholders who may demand an understanding of the underlying logic. To summarize, AI can give you a significant edge by handling more data than you ever could manually, rapidly adapting to new information, and spotting patterns hidden in complexity. Over 3/4 of financial professionals believe AI will be critical for maintaining a competitive advantage over the next 5 years. Don't be left behind. Start small, refine your approach, integrate AI insights with human expertise, and keep a close eye on both performance and ethics. By blending the brute force analytical strength of AI with your personal experience and judgment, you can navigate the markets with greater confidence and efficiency. Whether you're a day trader scanning for quick opportunities, a long-term investor optimizing a portfolio, or just someone curious about the next frontier in finance, AI is here to help you level up. Thanks for watching, and if you found this valuable, be sure to like, subscribe, and share. Your future trades might just thank you.